Hello, everyone, and welcome to today's webinar, Financial Services 2025, The Secrets to Improved Customer Experience, in partnership with Nuance. For those of you joining for the first time today, I'm Aaron Jackson. I head up our programming for Chief Customer Officers and run lots of events on CX, webinars, white papers, everything you can imagine CX here at Reuters Events. Really pleased we've got the opportunity today to bring together both our customer experience community and our finance community. What I'm sure is set to be a great webinar. We've got a great panel, which we'll come to in a second. But first up, I want to just talk through a few bits of housekeeping. I'm really pleased to see so many of you registered. There's a host of different countries on this webinar. There's lots of well-known brands. I saw Amex was there, Santander, and also some non-financial services as well. So someone from Burger King have registered, as well as the usuals from kind of EY, Financial Times. It's great to see such a varied and interesting lineup. Really want you to be an active part of this webinar. I'm sure you all know Zoom by now. There's functionality at the bottom for the chat. There's also the question functionality. Please use both. If you agree with what our panelists are saying today, let us know in the chat. If you feel differently, let us know in the chat. If you have any questions you want to ask, put those in. I'm going to be weaving those questions in throughout today's discussion. So yeah, get them in nice and early. And as soon as there's kind of a relevant opportunity to drop them in, I'll get those over to our panel. So please do use that functionality. The last bit of housekeeping before we jump in is today's session is being recorded. So if you've got any colleagues that you thought it would be relevant for, or you just want to revisit your own notes and your own vision yourself, then please do keep an eye on your inboxes. We will be sending out that recording within the next week. So yeah, do keep an eye on your inbox for that. Well, without much further ado, I'd like to introduce our panel for today, who are popping onto screens now. First up, we have Andy Kingston from HSBC UK. Andy, it's great to have you joining us today, and I guess kind of representing the banks and providing the in-house perspective. Can you give us a quick overview of your role at HSBC?
Yeah, thanks, Aaron. Thanks for the invite. So I head strategy and transformation for our UK customer service function. So my role really involves looking at the way we work, the way we serve our customers, and how we blend the power of our people with the technologies we use to help our customers every day.
Okay, great. I'm going to go around the screen so in order. So next up, I can see Chad. Chad's calling in from Seattle, very Microsoft, I guess. So yeah, Chad, thanks for joining us. Can you talk a bit about your role here there at Microsoft?
Yeah, sure. Thanks. So I'm part of the Worldwide Financial Services organization within Microsoft. And one of my key focus areas is leading our customer experience practice. Been in the broader kind of technology and financial services space for, probably longer than I care to remember, but 20 plus years. And a lot of my career has been focused on helping banking organizations and financial service organizations apply technology to their unique industry needs. So look forward to today's session.
Yeah, great to have you joining us, Chad. And then rounding out today's panel, we've got Sebastian Reeve from our partner Nuance. Seb, it's great to have you joining us. Do you give us a quick overview of your role and Nuance?
Well, thanks, Aaron. Hi, everyone. I'm Sebastian Reeve. So I lead industry solution strategy at Nuance. If you don't know Nuance, we have been augmenting customer experience with artificial intelligence type technologies for more than 2 decades. In fact, I've been at Nuance about 12 years, and when I started, I can remember being told by a senior banking exec speech recognition would never catch on. 12 years later, which is not really a long time. Clearly, the world's changed. We're now handling kind of about 30 billion interactions a year across all the organizations we serve. And the big news really in the last sort of month or two has been we've been acquired by Microsoft. So Chad and I are now colleagues, and we're really excited that our best days are now ahead of us. So thanks for having me today.
Yeah, it sounds like an exciting time to be part of it there. And yeah, I'm sure there's kind of lots that you have to talk about, kind of integrating everything together. Before we jump into the discussion, just a quick reminder, I see some more people are kind of joining now. Very much want to have your opinions today. So do feel free to use the chat and the question functionality as we go along. But yeah, starting discussion today, I thought let's talk about what customers currently expect. There's been quite a few changes in just how much basically your customers want from you in the last few years, driven partly by the pandemic, but lots of technology innovation as well there as well. So Andy, coming to you first, how have customer expectations changed over the last few years, particularly with banking and I guess of yourself?
Yeah, and this is a question that it's been asked a lot in the last two years in particular because of the pandemic, Aaron. But as you say, it's been a changing and an evolving situation for probably the last 10 years. It's just accelerated. And what we're seeing is an adoption of technology in all of our lifestyles, which I would probably define as on demand. We expect to use technology to interact with brands, not just banks, but brands across our lifestyles, to give us access, to give us control at the pace and the speed and the location we want to be at, and organisations need to adapt to that. What we're seeing from a financial service perspective in HSBC is that although customers want on demand and they want technology, they still lack confidence, whether it's financial education, whether it's financial confidence, whether it's knowledge. They still want the human side of the service alongside the technology. And I describe it as on-demand interaction when you're ordering a pizza, or on-demand interaction when you're now online grocery shopping. If you get the wrong pizza, you order the wrong shampoo, there's little downside. There's maybe a bit of disruption. If you interact in financial services and you get it wrong, there's probably a greater impact, and that tests customers' confidence, and they want to know that humans are there. So the response to that changing dynamic is that we've got to provide greater digital capabilities, greater on-demand facilities to our customers, but an even simpler way for them to get to the human access when they need a bit of support, they lack a bit of confidence, or they have the question of, well, what does that really mean for me?
I think, kind of jump straight in to cover some things we're going to come to later as well. Looking at, these people want 24/7 service, they want everything on demand, but at the same time, there's elements that they're going to need that empathy for, that human touch, that reassurance. So, and I guess we'll come to later in the conversation what applies to kind of which area, which ones make sense for which types of cases. Seb, I'm going to come to you next, just to kind of build on that. Obviously, we spoke about there's been lots of changes there and where we're currently at. Obviously, the title of the webinar is 2025. So I'm going to ask you the big question. What are the key areas that you think we'll see exploding in the next 5 years with regards to customer expectations? What more are they going to expect with us over the next few years?
That's a big question. I mean, let's try and sort of break it down a little bit. I'll build on what Andy said. I think it was a really great start to the discussion, right? I think the first area, that there are sort of 4 key areas as we see it. The first is kind of really thinking about aligning distribution channels for the institution. So, the expectations, as Andy laid out, for digital, but also for remote working for advisors, for the bankers, right, on the inside of the organization, have changed everything. So it's kind of now about being where your customers are and figuring out where they are, and being where your bankers now are and ensuring you can connect the two. And that's less easy after the last couple of years of change. So certainly, I think the stat now in the UK is something like 75 or 76% of people are using digital banking, as a priority. I think it's a little less in some parts of the world, a little more in others, like the Nordics and Spain are a little higher, and I think the US is at around 65, but still it predominates now, digital. Also thinking about sort of reframing the role of branches and the physical kind of face-to-face encounters and what that's actually for. So all of that kind of umbrellas under sort of that aligning distribution side of things. There's also, I think, the second area, thinking about your resources and how you prioritize those resources for the expectations. As we've moved to digital, the act of selling is changed now, right? So thinking about not only service, but how do I actually get more products in front of customers when they're not coming to meet me and talking to me in the same way they were before. So I think there's been a significant revenue decline last couple of years across the industry because of that digitization largely, and the sort of change of the channel mix, as I mentioned. I think the top 10 banks are able to get 2/3 of their revenue out of digital, but that's very, very different from the sort of general population of banks who are doing about 1/3. So it's 2/3 by the best and 1/3 by the majority. So there's definitely a lot of work to be done in terms of how to drive sales out of those kinds of encounters that we're now having on digital channels. And Andy mentioned trust. I mean, I think that's I don't know why I put that third, because it's really first. Like in the end, people, it's about rejuvenating that trust, I think, and thinking, very carefully about the role of the institution in society as we move forward now as well. People are pressed financially more than ever before, and it looks like that's going to increase. So, how should we behave? Fraud is also on the up, so that sort of affects the whole trust dynamic, right? Unfortunately, we've seen a lot of fraudsters exploiting the sort of changing dynamic in terms of how we interact with brands over the last few years, which means we need to sort of deal with that and be shown to be dealing with that as well, in a way that sort of encourages customers that we're going to keep their money safe and keep their data safe and their privacy safe as well. But also that sort of stretches into, how do we manage things like collections and debt management, and should that change because of the way people's finances are today or moving forward as well? So there's a lot of kind of interesting topics I think we could dig into there. And the fourth area, I think, is just about agility. If we've learned anything over the last few years, it's expect the unexpected. No one saw the pandemic coming, and it stretched us all. Some institutions happen to have been in a really good place in terms of, running an agile operation. We're able to kind of deal with change in a way that made them able to kind of flex with the new needs and the new expectations, but others weren't there yet. So I think as we move forward to 2025, we're going to leave anything there. It's build that sort of agile business, because we don't really know for sure, what the crystal ball has in store for us. So I think those are the sort of four main areas I think for banks to be aware of over the next 5 years and really think about.
You've done a really good job there of taking quite a big question I threw at you there and responding so succinctly and breaking it down. So appreciate that, Seb. And lots of we dig into for this webinar there. So you mentioned about kind of the channel mix and kind of the baseline for pushing to more digital, being trust and safety, and building off that. One of the things you mentioned there is, of course, lots of people working remotely, working from home now, and I kind of want to speak a little bit more about employees, and it feels like a really big kind of buzz topic at the moment is employee experience. Obviously, there's the Great Resignation, but there's also using technology to empower your employees to I guess kind of answer more and more complex cases. Chad, is that something I can get you to kind of pick up on that? I guess kind of relationship between customer experience and employee experience, and how in creating a better employee experience over the next few years will help drive that better customer experience.
Sure. Yeah, no, that's a good question. I think a lot of people tend to almost put employee experience and customer experience in separate silos and think that never shall the two meet. And really, if you think about kind of a typical banking scenario, a strong employee experience drives a strong customer experience. And I think that many banking organizations are kind of starting to realize that. There's almost a virtuous cycle, if you will, that as employees become more empowered, as they become more productive, as they have more time for kind of value add tasks, and as they can minimize kind of the menial tasks and automate processes and not have to spend time looking and hunting for information, they then can really kind of concentrate their efforts on more, as I mentioned, the kind of high value add tasks to the customers, and also have more time for those customers. And so I think that's often, sometimes that connection is not always made. And I think those two areas really need to be joined at the hip, if you will. The other thing too is that as you kind of are reducing menial tasks and you're making the employee more efficient and you're making it kind of a better daily day in a life experience for the employee, they're going to be more satisfied, they're going to be happier, and that's going to come through in their interaction. So a happier employee leads to a happier customer experience. And it's really hard to disassociate those two areas. And so we really believe that that's important. It's something we believe in very much so at Microsoft. And the last thing I'll mention is that as you are empowering employees and giving them information and kind of increasing their knowledge level, you're also then giving them the ability to make more intelligent, kind of relevant recommendations to those customers, right? So now they're not kind of just kind of working from the hip or kind of just shooting in the dark. They actually have kind of a holistic set of information about that customer. They have all the tools at their fingertips. They can use that as they're interacting with the customer. They can use it to prepare for that customer meeting. So I think really, those two areas really are very intricately intertwined, and something that many bank organizations are starting to kind of take a closer look into.
It's empowering your employees then to engage your customers, I guess, kind of on that deeper level. And we've covered lots of areas there, and I'm keen to dig in a little bit deeper as we go through the webinar. Andy, I'm going to come to you next. One of the things that a few of the things we touched on there, Seb mentioned there about revenue and kind of where that lives. And it feels like there's almost kind of a battle sometimes with marketing for who controls the business and kind of has that seat at the table. But ultimately, both people just want to drive customer engagement and loyalty. Where do you kind of see in the next kind of few years and the biggest opportunities to increase customer engagement and loyalty?
So I guess linked to what I said at the start around finding a way of bringing our people closer to where our customers are, which is digital, is absolutely critical. And creating that bond between self-serving and digital, but having a human support there. I think that there's probably 3 steps that I see happening over the next few years and that we're very focused on. The first one we've made good progress on, which is the really basics of what banks do, which is keeping your money safe. You know, how do we help you as a customer contact us? And in a customer service function or a contact center function, you know, it's long been a bit of a standing joke how hard banks make it to pass security and actually get to an agent. And we're doing we're investing heavily in doing the opposite, making it as easy as possible using, biometrics, AI, etc., to verify customers. So there is minimal to no effort, and an agent can then just get on with serving. And I said we've made good progress. We'd still like more of our customers to adopt, but that's already shining through as an opportunity because customers expect it to be difficult. They've learned from experience. So as soon as it isn't, you're already on the front foot. The second, and I think probably the most important for the next 2 to 3 years, is how do we get better use of our data into day-to-day interactions. We've started to make good progress in this area, but ingesting data into certain touch points, whether automated or human-driven, will change the experience. You mentioned some of the brands on this webinar today. Lots of large organizations where the customers say, well, how does that organization know me as an individual? How do they know me as we can't provide every customer with a relationship manager. That's just not scalable in our organization. But we can use data for customers to feel like we do. So, some examples recently, we've been able to use data, some recent regulatory change around e-commerce transactions. We now use data to help customers understand the success or sometimes the failure points of their e-commerce transactions. And we deliver that through the technology, but then provide it also to our agents in the background. So if there's more complex inquiries, they can be very, very specific and provide very specific advice. I think the third element then is about how do we proactively engage with our customers. So rather than being a reactive service provider, what does proactive service look like in the future, and how is that delivered through technology? And Seb touched on earlier about the kind of fraud element. How do we stay ahead of the fraudsters who leverage technologies we use today, phone calls, etc., SMS? Well, we've got to get ahead of that and not shy away from proactively engaging our customers, because the role of a bank is to provide advice and support as well as keep customers' money safe. And if we don't do that, we're not fulfilling our duty. So, we're working on how do we use the technology to give the customer the confidence it's the bank contacting them and not somebody pretending to be us, but then enabling us to be proactive in helping that customer where we see the opportunity. And that in the last 2 years has become more challenging because fraudsters are trying to, step in the space and use the traditional methods we've used. So we've got to get ahead of that. And I think the next 3-4 years is going to be really interesting in how we develop those strategies.
Yeah, as you kind of mentioned there, I think as well, driven across multiple industries, right? People are trying to give a frictionless customer experience when they're providing service, and it's just that bit tougher for regulated industries like finance, because people want that frictionless experience, but you still need to have kind of the right checks and balances there to make sure you're fitting regulations. So yeah, I guess using technology to speed that up. With regards to kind of offering that frictionless experience, one thing that a lot of companies are looking at the moment is the intent of their customers and really capitalizing on that. Seb, I know that's something you're an expert in, so can I come to you on talking about customer intent and capitalizing on their needs?
Sure. So, I mean, clearly the gateway to any interaction is figuring out what the customer's calling you for, right? And understanding kind of exactly what it is they're trying to get to. So I think, with a long-standing, solution relationship with banks in this space, that's grown out of, please tell me why you're calling in when you phone the IVR, for example. And we've been doing that for 20 years. And I think that, automating that step of the conversation is pretty critical sort of gateway, if you like, to being able to automate more or do more downstream, like, offer them a self-service experience that's meaningful, or get them to the right agent, or whatever it might be. But it's not that easy to do. I mean, in banking, the reasons for contacting a bank are fairly complex. I mean, it's somewhere between 200 and 500 different reasons you can easily identify, for a multi-product bank, more in some cases. And that's sort of across, cards, mortgage, loans, insurance, and all of the different products. If you think about it, it can be very, very complicated, but it's a necessary step, because it changes the relationship between, the friction of the interaction. You can't have a menu with 500 items in it. No one would listen to that, and they'd less pick the right options, right? But if you say, please tell me why you're calling, and you can get the intent right, that's a very simple way of actually, bringing simplicity to it, with a lot of downstream kind of benefits to the business. So I think that's, intent is incredibly important to get started. And Andy mentioned, starting to get ahead of that though, and using more data. So today the game is not just asking, but also now predicting. What do we know about you? If you're calling us, you're already in a sort of late stages of a mortgage application. There aren't 500 reasons for likely you calling me right now. There's probably more like 3 or 4, right? And I can narrow the field with the right algorithm, the right model, and say to you, are you calling about the mortgage application, yes or no? And of course, that's even easier for the customer at that point. So they don't even have to think about what to say to why are you calling me today. So intent, I think the direction of travel on just on that simple kind of first part of the call and getting that right. There's a lot of innovation going on there. But these days, that kind of, the technology underpinnings of that are pretty well established. I mean, we're sort of more than 9 out of 10 things that customers say in answer to that sort of question we're getting right. So that's massive downstream benefit to both to the bank and to the customer.
Yeah.
And Aaron, if I can just kind of jump in on this.
Yeah, sure. If you want to add to that, Chad. Sorry, I was going to come to you next.
Yeah, no worries. And I think Andy would probably agree with this as well as Seb, is that in addition to everything they said, which I completely agree with, the customers over the last 10, 20 years have also become much more sophisticated. They've become much more mature. They're getting used to kind of more personalized services, whether that is Amazon or some other online service. We have non-traditional financial service organizations moving into banking, trying new approaches, and putting kind of increasing pressure on the traditional banks. So long story short, I think banking organizations today are realizing that they have to do more. I think Andy's mentioned more than just kind of provide financial service products and products and services. They need to become that trusted advisor. They need to understand the customer, not just at an individual level, but they also need to understand that household holistically. They need to understand their aspirations and their plans, anticipate life events, and really kind of, really become more of that kind of guided expert for the customer. I think Andy made an important point that it's impossible just share from a volume standpoint to provide that to every single customer, through a relationship manager or some of their banking specialists. So I think a lot of banking organizations now are also starting to turn to the power of analytics and using things like predictive analytics, machine learning, and other tools that will allow them to augment their human-led channels and allow them to kind of take a more prescriptive, kind of personalized approach to their customers. Of course, where possible, they'll have that human interaction, and relationship manager or banking specialist or mortgage broker can provide that. but just thinking about it from a scale standpoint, that needs to be complemented with some of the technology that can enable that at a broader level. So I think many bank organizations, I'm sure Andy would agree, are really trying to dial down on that kind of trusted advisor piece and really trying to understand their customers at a more holistic level, not just at a transactional level, not just at a balanced overview level, but really understanding them both at individual and household level.
Okay. And I guess kind of one thing I want to speak to next, obviously we've got lots of, as I mentioned at the start, lots of companies joining. And I feel like with them, they have to wear many different hats, right? They're trying to lower the cost of service at the same time, in some cases, drive revenue. They have to invest in the right places. How do you kind of balance those different objectives when you're looking at these technologies? Obviously, we want to provide a more seamless experience, a more frictionless experience, more personal experience. But again, there's still very different objectives there. So maybe we kind of put to the panel, how would you go about kind of balancing those different objectives when looking at technology and kind of your roadmaps? Seb, if I come to you first, I'm going to pick on you.
Oh, sure. You were going to put it to the panel, so I was just going to stay quiet for a second. I guess there's been a link in the customer service industry between the effort a customer puts in and the loyalty you're likely to get in return, right, for a long time, and that's established. I don't know, must be going back more than 10 years since I first saw that report published in terms of proving that link. But I do think meeting the customer's service needs efficiently is the sort of table stakes, the gateway to being able to drive sales, right? I mean, if someone's not having an easy time with you, you're not going to have an easy time trying to sell to them. Anyone who's tried to sell anything knows this. So I think Chad's assertions on understanding intent and how we make that simpler, I think it's all sort of making sure that we're in the right position to start to figure out how to drive revenue. I think when we're doing that, though, it's that listening process, that analytics process. What comes out of that conversation is giving us really important context, and in the sales process or driving revenue generally, context is really everything, right? So if someone calls you and says, I don't know, I'm traveling next week and I'm wondering if my card's going to work overseas. Now we're all traveling again. That's a brilliant opportunity to sell travel insurance to someone, for example, right? Okay, it's a bit simplistic, but it's context. It enables you to kind of do something at the right time. So it's not just about having the right information about the customer, but also applying it at exactly the right moment of need. If you can get that sort of context and timing right, I think that's what really starts to drive opportunity in terms of service to sale, right, and driving revenue there, which is not an easy thing to do. I mean, there's a lot going on in real time in any institution at scale. So figuring out how to programmatize that, I think there's a lot of technology that's now sort of coming into play to help banks do that. And honestly, I think banks are learning a lot from retailers, right? If you kind of look at online retail at scale, they're providing, real-time recommendations. I saw a stat that says Netflix, basically 75% of the movies we watch on Netflix now have come from a recommendation, which is telling them that their recommendation engine is doing a really good job. So we can learn from that and figure out how to sort of take those learnings into the banking sector as well, right? To get that sort of context and timing right. And so from our perspective, we're seeing institutions use, innovative approaches like targeting online. And so that context is not just the customer information, but also looking at data or metrics about how they're using the website right now. Do they look lost? Have they been round in circles 3 times? Have they been hovering on something for a while? Plus their context of them as a customer and the products and services they're using, and then figure out what exact recommendation you would make to that customer at that point, right? Do they need a chat? Do they need an advisor to speak to? Would the video help them, right? Whatever it could be, you can start to optimize for that and automate it. And also importantly, measure the results from that interaction and start to prove that it is actually moving the needle in terms of conversion or, interest being shown in the product set. And I think, Andy also mentioned, I think something I agree to, which is, getting beyond that sort of being more proactive on the inbound service is also then really reaching out to the customer ahead of them talking to you in the first place. So we're actually working with a white label cards vendor in the United States for quite a long time, who built some fantastic algorithms and sophisticated data models, and they're reaching out proactively to customers on voice, SMS, other channels at exactly the right time to make card or service upgrade offers to them. And they're getting fantastic results from that, which they can really sort of measure, and then they're using all the feedback data from that to optimize those models to improve over time as well. And that's a real retail kind of way of thinking. So I think it's really interesting for banks to start to think more like retailers in that sort of personalized, proactive kind of way now as well.
Yeah, I think to some extent they don't have a choice, right? Consumers kind of get programmed and educated by all these other industries they're working with, and banks will have to follow. I mean, you spoke a lot about context there. Andy, I wanted to ask you about kind of what context means in your role there at HSBC, and if you're, I guess, kind of echo some of Seb's sentiments there.
Yeah, I do, and it probably answers Balaji's question in the Q&A at the same time. So there is and will continue to be a role for the human. I firmly believe that, and we firmly believe that in customer service. Customers are turning to technology, where we're investing in our capabilities, but our customers still want the human there, and it comes down to two things. One is trust, and I'll just touch on that in a second. And the second is removing what I call bad demand. We've done a lot of work in the last 3 years to take out the bad demand by understanding the context of the contact we get, and whether that's a call, a chat, an email, social media interaction. Trying to understand what the customer is actually trying to achieve rather than what they're doing, I think is the secret to that. And then playing it back through customer journey mapping, finding broken journeys that are propped up with human interactions where customers want to interact digitally, has changed our business model. We've also, I said it a couple of times already, we've put our people closer to where our customers are, which is around our digital channels. 4 years ago, we handled about 5% of our demand over our chat channels. It's now about 40% for the UK, and growing rapidly, and our customers love it. We get higher NPS scores in those channels because of the efficiency and the ease of access. But I'll come back to that trust piece, that whether you're trying to grow your share of the customer's wallet in financial services, whether you're trying to drive revenue, just offer a great service, it comes back to trust. Because whether we believe we've done a good enough job as an industry or wider, the level of financial education in the UK, and I speak as somebody who lives and works in the UK, is probably not at the level that most of us would want. And therefore, to what I opened with, the level of confidence about financial interactions is lower, and that drives questions and concerns into every customer. And I often talk about about financial confidence. If we all had to send £50, $50 wherever, somewhere in the world, we'd probably all consider doing it digitally. If you then made it 500, 5,000, 50,000, there'll be a ceiling that we all hit individually where we turn to a human to help us. And the reason we come back to banks to do that is the trust of the human to help. And if we make that really simple, that really easy, blend that human contact with the technology, then when the customer wants to make a large purchase, a car, a home, or insure something that's valuable to them, insurances around life, etc., they'll go to the people of trust that they've done it with before. So price then doesn't just become the differentiator, service does, and trust with the human. So I think these are important dynamics when you're trying to grow your business, you're trying to reduce your cost to serve, you're trying to offer greater service. But it all comes back to this bit about intent, which is why is the customer trying to do what they do, and why are they contacting you? And we've found numerous occasions where we've just got a customer journey that isn't quite right. The content on the website isn't clear enough. We've got a process or a policy that doesn't quite work for our people, which drives ambiguity, and the customer feels the pain of that. So we work really hard to remove that, and it's making a big difference.
Yeah, thanks for that question, Balaji, as well, for putting in there. Chad, do you agree with that? Just to kind of recap, Balaji's question was about, with all these new technologies that are available now, is there still a place for human agents? Yeah, what are your thoughts on that, Chad?
Yeah, I think there absolutely is. I mean, I think we very much live in a kind of omni-channel world. I think customers expect an omni-channel experience. And what it really comes down to from a customer standpoint is kind of the power of choice and convenience. So they want the ability to contact the bank when they want to, through the channel that they're comfortable with. And depending on the demographic of that individual, that may be a phone conversation, maybe going into the branch, maybe SMS, maybe online, maybe the call center. Each person has their kind of different unique needs. As Andy mentioned, it also relates to the threshold of the financial threshold, if you will, of the product that you're dealing with. And in many cases, as you kind of go to more complex products, customers are going to want to talk to someone in the bank, a certified bank, if you will, or an actual kind of approved, regulated bank, and have that confidence in the person that their money is being safeguarded and transferred to the right people. I also think there's a little bit of, I think we're going to talk about this later on, but I think sometimes there's a little bit of a misguided view that AI and self-service and some of the more kind of non-human channels automatically obviate the need for human-led channels. And then I think in many cases, what you're seeing is an intersection between these two, right? So if you start with a chatbot, for example, someone may be on the computer doing a chatbot, putting some questions in, getting some information back from the chatbot. At some point, they'll probably be transferred over to a live agent once they hit a certain threshold regarding a question, or if their questions cannot be answered. You think about sentiment analysis and the customer sending in an email and kind of indicating that they're very angry and they're frustrated and they're distraught. A sentiment analysis engine can go and pick up those keywords and identify that this customer is severely, how should you say, unsatisfied or frankly angry or frustrated, and automatically route that maybe to a tier 2 kind of pool of agents or a supervisor who can take immediate action and try to prevent that customer from becoming even more frustrated to the point where they may even want to leave the bank. There's many different types of examples. I think Andy mentioned the next best action example where you're kind of using maybe a next best action tool based on predictive analytics and kind of patterns and trends and identifying what kind of products and services that customer may want. Well, at a certain point, you're going to have to hand it over to a relationship manager or banking specialist. So I think really what we're seeing is rather than kind of one obviating the need for the other, we're seeing in some cases one instantiate the need for the other, and there's an intersection between kind of the self-service channels and the human-led channels.
I think that's really well put, Chad. I mean, I think the humanity in the whole thing is really critical, right? I mean, we're dealing with people's life events, like critical life events, and their ability to finance that, birth of your first child, getting married, buying a car, all the kinds of things, bereavement. I mean, all the things that happen in real life are coming to the fore in terms of financial transactions and interactions that surround that. The idea that we're going to take the humanity out of that completely and automate absolutely everything is just never going to happen. You couldn't deal with those situations with AI. And that's, coming from someone who's, as I said at the beginning, worked in the industry for a long time, right? And also just if you think about it, just from how do you train these kinds of interactions, self-service interactions? Well, we're actually training AI based on learning from people, right? We're not at the point in time when we've got these systems basically looking after themselves and basically answering all of the questions that might be asked. They're being taught, and they're being taught by people who have actually done this job in the past and know how to answer these kinds of questions or know how to handle these kinds of situations. So there's a threshold that I think we're nowhere near sort of at from a technology perspective, but there's also a necessary process of training that I think is there. And as we wind forward into 2025, we're not going to see suddenly AI handling bereavement situations any differently, and absolutely shouldn't be handling that kind of thing at all, right? But what we do need to do is free up the right kinds of people, specially trained to do so, by taking a lot of the onerous work away. And I think that's what the balance is really. It's it's basically taking away the easy, straightforward, non-emotional stuff that actually people don't really need to speak to someone for, and then making sure they've got the time to spend on the important things in life.
Yeah, I was just going to say that, and I know you're about to ask another question, Aaron, but I think a lot of it comes down to having an effective division of the workload, if you will, right? So if you can use AI for some of the more kind of basic, kind of mundane, kind of more frequently asked questions and kind of, use it to streamline processes and, use it as a kind of a data mining engine. That's all great, usage of kind of technology. But when you start to have things that require more context, more sensitivity, there's more emotion involved, as Seb mentioned, then you're going to probably want to have them talk to an agent. So it's not that one prevents the other or one, obviates the need for the other. It's really about trying to figure out the workloads that you want to use them in, and then bringing that together at some point for a seamless experience.
I love the idea there of, rather than using AI to replace humanity, it's using AI to work out who needs the humanity, right? Where best to apply that, who needs that human touch. Lots of questions coming in, which is great to see. I know we're quickly running out of time. This always happens with lots to discuss. And there's kind of mentioned there about training AI. I think that could be a whole nother webinar that we can hopefully have you back for in the future. I wanted to quickly touch on a question from Julie. We mentioned omnichannel there, but she's asking, is it important to have a single unified platform for all sales and service, e.g. in this case, card controls, disputes, banking, applications? What are the panel's thoughts on that, having one unified place, and how important that is to the customer journey?
I think simplified access is key, Aaron. So you could have more than one, but you need to have a simple way to access the, whether it's an internet banking platform, a mobile app. The bit I'm always really conscious of is not about necessarily unified, but if you do put all your services in a single place, to Julie's example, if you had all of their services in a mobile app, for example, the app then becomes very busy, difficult to navigate potentially, hard to know what services exist and don't exist. And again, this I think is where you then need to put technology in there. Rather than having lengthy menus, different carousels to go and find this information for, do we then, if you fill an app up with all of that technology and all that functionality, do you need to put a bot at the start of it to help the customer navigate to find their way around? So ease of interaction, the customer and user experience becomes key. And it's key, as I say, in both ways. You could have multiple ways, you could have multiple apps, multiple platforms, but you've got to make it easy whichever platform your customer's going to access, or you put it all in a single place, but then you've got to assist the navigation because it could easily become too full and too hard to find what you're looking for.
Seb and Chad, is there anything to add to that? Is it really just about ease of information finding? I'm sure you both agree with that by the looks of it.
Yeah, so I'll just make one quick comment. I'm sure you've all had this experience, but it's nothing worse than kind of getting on a call or going to a branch and trying to be cross-sold a product, and when you're dealing with a problem or you had it previously, just 5 minutes before that, you had a very negative experience. So I do think it's important to have that holistic view, because selling is all about timing, right? And if your salespeople are not aware of the history or kind of what's transpired in the past, then they may, frankly, instead of try to sell to a customer, in some cases may frustrate a customer. So I think having that holistic view is absolutely important. And it's also very important, as you're going back to their point about understanding the intent and needs of the customer, kind of predicting kind of future products and services they may have a need for, is by having that holistic view. So the short answer is yes, I think it's incredibly important.
Great. I know, again, the time is flying by, but I wanted to quickly sneak in a question from Sean Smith as well. And this is directed at you, who's asking about when you increase the usage of chat channels, did you see a drop in call volume to kind of offset that? And I'll add my own kind of question on top of that. Are you driving people specifically to chat because it's maybe cheaper and offsets the call, or is it a case of just where the customer wants to go is where you'll service them?
So yes, we've seen a reduction in call volume because of the growth of chat. It's partly us educating the customer that the service exists. I don't believe the kind of theory of build it and they will come. I think you've got to explain to customers it exists and show them how easy it is. I think I said earlier, we see significantly higher NPS scores in chat than we do on voice, probably because of the ease. And it's a really good example of putting humans where your customers are living their banking lives, which is around digital. So our chat services are in our app, on our website, in internet banking. We use Apple Business Chat, for example. Putting it in the right place as a customer service driver has been our focus. Yes, it's more efficient. Probably twice as efficient as we see on voice, give or take. So it does help from a cost to serve perspective. There's a bit of a leap of faith with it sometimes. I get asked this question a lot about how do you justify it to senior execs, and that's not easy. Some of the data is still not brilliantly understood, but we are seeing it as a rapidly growing channel. It's up about 500% year on year. I suspect by the end of next year, it will probably overtake the volume of phone calls we receive. And that, there's no way I can just singly tell customers I've got to do this. In terms of your point about kind of encouraging or deflecting, we do offer kind of deflection opportunities. We will launch a new service next month where in the IVR, customers who call us, if we believe from using the technology to recognise their intent, we think we may be better to serve them in chat. We will offer them opportunity to switch from a call to a chat session. And it comes back to what Chad said about creating space for the most impactful experiences on voice. We've moved away from lots of transactional activity in voice. We're down about 50% in the last 2 years, the amount of transactions we process over the phone. And that's now leaving us space to help with the different life events Seb touched on, bereavement, buying a home, going to university, getting married. Those are all the things our customers want our help with, as well as in the pandemic, just saying, how do I manage my finances? I'm on furlough, I've lost my income, whatever it is. That space to help those customers came because we've been able to move digitized transactional banking, but then move the support behind transactional banking onto chat.
Okay. And the whole piece about discovery of chat, Andy, really interesting. Sort of getting customers to use it, given the fact that if I think about sort of daily life, even my parents, let alone my kids, they actually don't make plain old phone calls very much to each other anymore, right? Peer to peer, we don't do that. We're sort of chatting, and then we're escalating in WhatsApp to a phone call, right? A call or FaceTime or whatever it is that your platform of choice, right? That seems to be normal behavior for people. So trying to figure out how to get that experience sort of right in the sights of that everyday kind of activity is really important. I love what you're doing with the phone channel, right? What you're about to do with the phone channel in terms of pushing discovery a little bit more, helps people who are using the phone every day, I think, to think about the chat channel, right, and hopefully start to drive future behavior, which is intriguing. Be interesting to hear how you do with that, right? I think that's super intriguing. We're also seeing kind of a lot of customers out in other industries predominantly try and embed chat into things like the Google experience. So if you're searching for a location, which probably these days in banking is not that necessarily, but in retail it's pretty strong, it'll actually put the chat capability right there on the search result on the map, right? And I think that's really interesting because you're getting into the sort of customer's discovery flow. So it's a great way to think about it.
I think there's a really interesting dynamic changing in our lives, Seb, because I've become really conscious recently the amount of people who, when they do call me out of the blue, whether it's a Zoom call or even dare say they actually call on a mobile phone, they start with I'm really sorry to call you, and how many Teams messages do we get saying, can I just give you a quick ring? Or to your point,
well, it's done.
How many times do you message one of your family and say, I might message my mum and say, hey, you in? Can I just give you a quick call? Rather than, 5 years ago, we just used to pick up the phone and see if somebody answered.
Voicemail must be dead now, right? Because you wouldn't just doorstop someone and call them, let alone then have to leave a message because they weren't there. You've teed the whole thing up in messaging already anyway, right? That's how the whole thing works. So downstream, you're not having to catch the missed calls because they're all done in messaging as well.
Yeah,
it's total change.
I know we're quickly running out of time. I did want to touch on, I guess, a kind of another hot topic at the moment. We've spoken a lot about discovery and people finding these self-service channels and speaking to bots. But ultimately, half of those calls, or somewhere down that journey, they're going to need that human interaction. There's going to have to be that handoff, that intersection between, I guess, your live agent and your AI. Chad, could I ask you to just talk about how companies should approach that and kind of what you're seeing with regards to having a seamless handover?
Yeah, and I think I might have alluded to that a little earlier, kind of talking about how you have a chat bot that then connects to a potentially a call center agent, or you have a sentiment analysis tool that flags a customer who is highly agitated and then kind of connecting them to kind of an escalation path, or intelligent routing. So I think we touched on that a little bit earlier, but there is one area that I did want to touch on that I think is equally important, and that is accessibility. And I think accessibility is becoming even more important in banking over the last 2 to 3 years, the last 5 years, and I'm sure Andy and Seb would probably agree. And it's obviously becoming even more important in society in general. And I think a lot of banking organizations are now trying to figure out how they can create a more accessible banking environment. And it's not only the right thing to do, it also will help them win the hearts and minds of their customers by doing that, because customers who either have a disability or a family member or friend that does will realize that this bank is really trying to make their services open and accessible. So just to give you a few examples, they could potentially use something like Metaverse for people who are physically unable to go into the branch, but still want to have that branch experience. They could use things like bioauthentication for people who may have memory problems and always are forgetting their password, or kind of having a problem with some of the kind of different rules and processes they need to input into the system. Use things like voice to text or text to voice for people who have dyslexia, so you can actually transcribe things from kind of the spoken word. So there's a lot of different technologies that can be used to help make a banking service and a bank itself more accessible. And I think you're going to see an increased interest in this area.
So I guess to build on that accessibility point, we have a question from Anonymous, who attends quite a few of these webinars. It's about kind of different generations and kind of how they're accessing digital experiences. I mean, can you teach an old generation, I guess, kind of new tricks with this and re-educate them on it? Or is they going to be a case of they just prefer the traditional in-branch experience? Andy, I guess coming to you first on that, with your customers, you're seeing kind of different demographics with different ages?
Yeah, I think we could all kind of guess that, by age, if you just looked at by age alone, the type of banking experiences customers tend to move towards. We see a slightly older population in our customer base tend to be slightly more internet banking savvy than they are mobile savvy. But by definition, internet banking's been around longer than mobile banking. However, digital experiences in our lives are prevalent even in an older generation. So all generations are interacting with digital in one way or another. There's very few people who live a truly analog lifestyle now. Even if you think to the basics of how people watch television, the kind of think of grandparents, they probably still have some kind of interaction with digital television. So we're all doing it. What I think is super interesting is how generations are changing the way they use technology. So one of the things we're seeing in the much younger generation today, and we've seen it kind of born a bit in Asia, but it's definitely alive in the UK, is that customer, we've talked quite a bit on this webinar about text and about chat, but actually what we're seeing the next generation is not actually typing. They're using voice notes, they're using voice in their device, but not to make a phone call, using voice to then create a chat or a text interaction, dropping voice notes to friends in WhatsApp. And I think what is kind of the next thing on my mind for the future is, well, what does that look like in banking? How do we enable customers to use voice notes? So voice is re-establishing itself in a younger generation, similar to what our older generations in our customer base will be used to, as in speaking to people. it's delivered in a very different mechanism. And then you think about our relationships with voice assistants in our households. And I won't use any of the names because it might trigger people's devices off in the background. But we are becoming more and more familiar with those. Again, how do banks react to that? How do we allow our customers to access our services through those bits of technology? So we're definitely seeing different populations, different dynamics, different ways of accessing services. The actual services being accessed are no different, and the underlying reason customers are contacting us doesn't change, whether it's a 8-year-old or an 18-year-old. It's about confidence, it's about education, it's about I can use the technology to this certain level and now I need a human. It's just that the way they're then using the technology to interact is different, and we've got to find a way of being able to respond to that.
It's also about personalizing the service in general, though, right? With old and young, you're personalizing the interaction to the user. As you say, I don't think one size fits anyone in terms of, people over a certain age don't use channel X or will use channel Y or prefer it, right? I think there's always this sort of marketing adage danger of segmenting people in an improper way. I don't know if you've seen it on LinkedIn. Quite often there's a picture of Prince Charles with 60-something-year-old man, born in the UK, independently wealthy and lives in a castle. And then there's another picture next to it that says exactly the same thing, and it's Ozzy Osbourne. And you can't exactly segment those two people together, but on the basis of those attributes, they're the same, right? And I think that's the danger when you sort of think about, giving people a similar experience. And we've also actually seen, I think, the last couple of years, though, the ability to look at a person's age and tailor the experience. So actually, we were working with a telecoms carrier in Spain who did age detection in their voice self-service application in their IVR, and it was to stop older people during the pandemic who were more at risk visiting the store, right? So they gave them preferential treatment. They got them ahead of the queue based on their voice sounding old when they asked them a question. We had an algorithm look at that, got them to the front of the queue, so the less of them were visiting the store, and it was a little bit safer. But you could build on that and segment, use age as a segmenter for experience. For example, maybe you wouldn't send an SMS to a chat session, Andy, next month when you launch it to older people, or you do it for younger people, or whatever else you decide. So I think it's a pretty interesting.
We would never do it justice in 4 minutes, but we could debate this forever, because
interesting.
There's a real risk to that, isn't there? Which is, true. If you, I'll use my dad because I know he wouldn't be offended, but my dad's 74. If I opted him out of visiting somewhere because of his age, his instant response is, "Are you calling me old?" He's because in his mind he's still young. He's young at heart, and he's still totally young. So, making those assumptions using data, using the technology, there's a really fine line between offering a great experience and trying to do it through a level of care and customer experience versus making assumption or assessment that the customer objects to. And that, that's a great challenge for us to face into over the coming years as we better harness technology and data. I don't know the answer to it. I think it's one, everybody on this call will seek to explore and understand, but it's one we should be absolutely aware of.
It feels like this is where we're going towards 2025, though, right? As we sort of think about the route forward, is how to solve some of these problems in terms of that intersection of data, segmentation, personalization, and giving people something that's tailored to them. It feels like that's where we're going to be spending a lot of our thinking time over the next few years.
Yeah, and I think it also just goes back to the earlier point you made about really understanding that customer at a holistic level, right? I mean, so we gave some examples where you may have certain segments, and some people may fit into those segments and others may not. And so that's really where you need to have that holistic view of the customer across all the different interaction points, across all the different products, understanding their needs, their plans, their life events, and then taking the appropriate action based on that kind of more in-depth understanding.
It's a fine line between, uncannily appropriate experience you're just giving me versus this is ageist. So I think you've got to be very careful with the way you use some of this.
Yeah, very careful indeed. I know we're quickly approaching the top of the hour. I think kind of the key things I took from that last bit there was, well, understanding your customers is going to help you navigate the journey of the next 5 years, but also bringing it right back to one of the things we said right at the start, being an agile business, being prepared to innovate, being prepared to be a first adopter for some of this new technology, and thinking about ways to use it to, provide ultimately what your customer wants. And that's a more frictionless experience, a more seamless experience, and ultimately humanity when they need it. For the right time. Again, we're quickly running out of time here, so I just wanted to wrap up with a couple of big thank yous today. So firstly, Chad Hamblin from Microsoft, great to have you joining us. Sebastian Reeve from our partner Nuance, and finally, Andy Kingston from HSBC UK. Thank you very much for giving up your time today. I'm sure everyone can find you on LinkedIn to keep in touch. I know we didn't get through kind of all the questions today, but really appreciate all the audience kind of joining and submitting those. Again, feel free to kind of forward those over to us, and we'll see if we can help connect you there and get you those responses for the ones we didn't get to today. And finally, I'd like to say a big thank you to our partner Nuance, who I believe there's going to be just appeared right on cue in chat, a link to kind of Nuance website there. So please do speak to those guys. Again, lots of interesting things and to say, and lots of new interesting technologies to explore there. So look out for an email of us with the recordings, but do check out the nuance.com website for more information in the meantime. Thank you all for joining us today.
Thank you very much.
Thank you.